The next bullet point that we would want to talk about is affordability. It is edging up, but you still have a bit of a hill to climb. And affordability has been helped a little bit by the rates that we just talked about. But again, to the extent they've helped, mortgage rates have been at levels earlier this year where they should have helped with affordability as well. But it seems like earlier this year, home buyers were less willing to embrace the lower rates that we had, not a lot lower, but a little bit lower, and use that as a reason to get out there and try to buy a home. So why is it? What's the difference now? Well, I would argue that it's more about wage growth, because one of the things that's happening, despite all the concerns about the labor market, wages have been growing. And so I think that's one factor in the fact that affordability is edging up. It's a little bit about rates. I think there's definitely some of it is because of wage growth. And then the other most important thing is home prices. Home prices are flattening in more markets than we've seen before. And we talked about this, I think, last week. The Case-Shiller index did show still an increase in home prices, but at a decelerating rate of increase. And that is even more so, I think, now and continues to be. Uh, that's not to say that home ownership, home affordability is not out of reach for still a lot of buyers, but affordability is edging up. In fact, the Fortune article that is the basis for this discussion did point out that if there is an affordability index out there that's monitored, and affordability is creeped up 3.1%. In other words, affordability is now 3.1% better than it was previously. A little bit about rates, I think a little bit, if not a fair amount, about wage growth. And then in particular, I think it's a lot to do with home prices. The rate of increase is slowing, it's moderating, it's kind of stabilizing, leveling out. And as I've said, to try to defend the mortgage part of the home buying process, I don't think it should be so much about blaming rates. Whenever I have a conversation with anybody, realtors and so forth, in fact, I had a few of those conversations yesterday at an open house in our local caravan schedule. It's not about rates so much. Rates historically are affordable. They're better than they have been on average in the last 50 years. Forget about the pandemic. What's really been the issue, in my opinion, is the home price. The home prices are what I think are the biggest factor in affordability. And thankfully, we are seeing some moderation in those prices. Now, I'll continue to say that's not a reason I believe, given how long I've been around this business, that you should take that as a sign that you should continue to wait because you think prices are going to fall substantially. I'm not convinced that the labor market's ready to crash. I think, yes, it's going to soften a bit. I think, though, now what's happening is we're seeing more buyers starting to look around out there. And while the home prices are moderating, I don't think we're going to see a precipitous fall in pretty much any of the markets out there.